All right, hello. Welcome to July 8th, 2024 trade recap video. I took one trade live, and that was all I took for today. And it was a losing trade. Yeah, let's get right into it. Let me change up my screen here. So, yeah. So, coming into today, I was actually anticipating. So, this was actually put out yesterday, at 5:14 p.m. So I said for tomorrow's price action on NQ, I anticipate for today's low to be taken. So this is what I mean by today's low, previous day low, and I was anticipating for previous day low to be taken just based on how this daily candle closed here. So I anticipate for prices to take out previous day low. There is a 4-hour FEG that was created, so I want to see prices respect that 4-hour FEG and trade lower from it. And notice how I noted out I anticipate for today's low to be taken and July 1st and July 2nd lows as well. So I'm anticipating that July 2nd's low gets taken and July 1st's low gets taken. And I note here, if we take out previous day low before the New York AM session, I would trade intraday models. So coming into the New York AM session, actually, we still haven't taken out previous day low yet during London session, and during the New York AM session, we actually retraced it back inside this 4-hour FEG once again. So after noticing, hey, we haven't taken out previous day low yet, my objective coming into the New York AM session is to take out previous day low, July 2nd's low, and July 1st's low. For us to take out June 24th's low, I would have had to see more displacement towards the downside. And here, we didn't respect any of the fair value gaps. So we didn't respect this 30-minute fair value gap. And we just closed above it. So this 30-minute fair value gap here should have been treated as resistance and supported the idea of us going lower, but we didn't treat it as resistance. So let's just go back to the New York AM session. So like I said before, my objective coming into the New York AM session today was to target previous day low, July 2nd's low, and July 1st's low. And we trade back inside this 4-hour FEG once again, correct? And notice how we close here on this 4-hour candle. So on this 4-hour candle, I can anticipate for this 4-hour low to be taken. And same here as the 1-hour and 30-minute. So the 4-hour, 1-hour, and 30-minute, and 15-minute, not 15-minute, sorry, just the 30-minute, 1-hour, and 4-hour, they all have the same objective coming into today, or coming into the 10 o'clock open at least. So whenever we opened up at 10 o'clock, I told the live stream that I wanted to see us respect this 15-minute fair value gap here, because we displaced away from a 4-hour fair value gap. And whenever I say displace away, all I mean is that whenever we traded away from this 4-hour fair value gap, the leg that is created has fair value gaps within it, and there's this 4-hour fair value gap right here. And I'm sorry, not 4-hour fair value gap, 15-minute fair value gap that gets created. And my entry pattern actually didn't occur, so I wanted to see us trade away from this 15-minute fair value gap, correct? And on the lower time frames, provide me an entry to target that 15-minute low. But here, so this is that 15-minute low that I'm talking about. I wanted to see us retrace back inside like a 3-minute FEG, some sort of like that, because the reason why I didn't take this entry at this 15-minute fair value gap here is because if you look at the risk to reward ratio, I'm risking 76 points on NQ, and that is a lot of that's a lot of points. And I wanted to refine my entry and get an even more precise entry by using the lower time frames, and I wanted to reduce my risk and mitigate the stop loss as low as possible. So after seeing, this move down away from the 15-minute fair value gap, based on this 15-minute power of 3 here, I wanted to see us trade back inside a 1 minute or 3 minute or 2 minute or 4 minute or 5 minute FEG. So to do something like this, so we close on this 15-minute fair value gap, correct? I wanted to see us do something like this and then continue lower to attack previous day low, and like I said, such as previous day low, July 2nd's low, July 1st's low. But this is what we got. We got an instant move down lower at the 10:30 mark. So I wasn't even able to get into this trade here. So because I was waiting for a retracement, I didn't get that entry and prices left without me. And so the trade that I actually did end up taking was this one right here. It was this one. Okay. The trade that I took was so based on this 15-minute candles, correct? Based on this 15-minute power of 3 here, I can anticipate for us to take out this 15-minute low. And I go onto the lower time frames, right, to find a supporting idea of us taking out that 15-minute low. So there's this 2-minute FEG here that we create, and there's a 3-minute FEG, a 4-minute FEG, and a 5-minute FEG, but it's all the way up here. So I'm basing my trade off of the 2-minute FEG because I'm not anticipating for us to retrace this high back inside the range. But so this is what my trade ended up looking like. It didn't actually look like that because it was not a 0.79 risk to reward ratio. It was this was the trade. This is exactly what the trade looked like on stream. So it was a 1.28 risk to reward, and I'm entering based on this 2-minute FEG, correct? Again, and this refined it to the 1-minute FEG. And like I said, I'm targeting that 15-minute low. And I get stopped out. And but the thing is, I actually was able to mitigate risk because I noticed how whenever we opened up at 9:45, or sorry, not 9:45, 10:45, we instantly came back inside that 2-minute FEG, and notice how we didn't take out this low, but we retraced again. Noticing that, I took off. I believe I took 10 contracts here. It was either 10 or 9 micro contracts, and I took off 5 contracts. Somewhere like around here, and then I got stopped out fully whenever we came up to here. So one thing I could have done better here was just based on this 5-minute FEG here, or 5-minute candle closure, I could have anticipated for us to, I could have just looked based on this 5-minute fair value gap and see, oh yeah, this isn't looking as bearish as I wanted to see, because just based on this 5-minute candle here, it doesn't look favorable, and it appears that we could retrace back inside this 5-minute fair value gap. So I ended up getting stopped out, and that was my only trade for today. And we had a deeper retracement per se. So we had a retracement back inside the equilibrium of this price range here. So we retraced back inside the equilibrium of this price range from this price leg high. So the swing high that gets created whenever we retrace back inside the 15-minute fair value gap, we displaced away from it, and then we trade back inside the equilibrium of this range. So we came back into premium, and then we sold off. We didn't come back inside this 15-minute fair value gap, and we continued to sell off, attacking July 1st's low, and leaving us without any entries for the rest of the day. So one thing I can applaud myself for is I had the buys correct, but my entry was a little bit it wasn't as clean as I wished it for. So like I said, the reasoning being is because of this 5-minute fair value or 5-minute power of 3 here, it doesn't look as bearish. And like I said, After taking out previous day low and July 2nd's low, it just, retracing probably would have been the best idea here. And also note, whenever we do retrace, we retrace back inside the RTH gap. Whenever we are in a sell day, and let's say we gapped up, right? We gapped up, but we on the daily time frame, we're bearish. So we have a bearish bias coming into that day, but we gapped up. So whenever we gap up like this, you want to anticipate for prices to fill in this RTH gap, and sometimes we might just leave it, and after we fill it, we just run away from it. But sometimes we could retrace back inside it, and whenever we do retrace, expect prices to treat it as resistance to continue lower. If we are in a sell model and in a sell bias coming to that day, and we were, like I said, my targets were July 1st's low and revert back inside this weekly FEG here. So yeah, with that's gonna be all for my analysis, for my daily analysis for today. A little bit wonky for me, at least my execution wise. Yeah, just seeing it run without me and taking out the objectives, even though I had it in mind. That's one thing that, like I said, I have to just be content with the outcome, because like, even if I do know what the draw is, right, if I can't find an entry pattern for me that suits me and that I'm willing to risk, then there's no point of me taking that trade. And this is an entry pattern that at the time I was comfortable with, but now looking back on it, like I said, I'm learning and noticing how this 10-minute candle closed here. This 10-minute candle, it just looked like this is very bullish. Just looking at this 10-minute candle, 10-minute power of 3, we can anticipate a retrace back inside this 10-minute FEG here and respect it, which I should have anticipated. And we respected that 10-minute FEG to continue lower. Is there anything else I do want to talk about today? Not much, to be honest. There was this trade that I did notice, but I wasn't able to get into it because it's, I actually wasn't trading the New York PM session, but whenever I was back testing it, this is a solid trade that I would have taken here. So just based on this 30-minute candle here, we can anticipate for us to take this 30-minute low and for us to rebalance this 30-minute fair value gap. And you can even tell based on this hourly candle as well. So the hourly power of 3 here, we can anticipate for this hourly power of 3 to take out this hourly low. And it aligns with the it aligns with the 15-minute power of 3 as well. So understanding that narrative, my target here, this was my trade. I believe it was here. Okay, no, sorry, it was actually right here. So yeah, it was this trade here. So I'm targeting that 15-minute low, this 15-minute low here, which aligns with the 30-minute low. And on the 4-minute time frame, I do believe there was a entry pattern for me to take. There was that 4-minute FEG here. So there was a 4-minute FEG that we retraced into. That was my entry pattern. And my stop loss being this 1-minute candle's high, and my first partial being this 15-minute low. And like I said, I'm anticipating for us to rebalance this 30-minute FEG, and we did do that. So that was my the trade that I did notice whenever I was backtesting the New York PM session. But yeah, I think that is going to be all for the recaps today. there's not much I want to talk about for today at least. But coming into tomorrow, so what I am anticipating coming into tomorrow is we are either going to show respect to this 4-hour FEG here. So for us to continue lower and attack previous day low, I would have to see us respect this 4-hour FEG. And if we don't see respect to this 4-hour FEG, what I mean by if we don't show respect to it, what I mean by that is if we get a candle closure above the 4-hour FEG, that to me will indicate prices will be retracing back inside this daily FEG here. Because if we are to continue lower, we have to respect this 4-hour FEG, respect it, and trade lower. But if we get a if we get something like this, we get a candle closure above it and we retrace back into it, I am anticipating that to act as an inversion fair value gap, and I will anticipate a retrace back inside this daily fair value gap here. But yeah, that is my insight for tomorrow. Like I said again, I am anticipating for us to continue lower, at least on the daily and weekly time frame, but on the hourly and 4-hour time frame, if we are to trade lower, like I said, we have to show respect to this 4-hour FEG if we are to be going lower. And with that, I'll call it a video. I'll catch you guys later on the next recap video, and make sure you guys tune in for tomorrow's live stream. I will be live at 8:20 Central Time, so you guys be there or be square. I'll catch you guys later. Peace out. Bam.